Good morning, good afternoon, good evening. Welcome to this episode of Trade Winds. My name is Cecilia Malmström. I'm a non-resident senior fellow at Peterson Institute for International Economics in Washington, D.C. Today, we're going to talk about shipping and different challenges related to shipping, starting with pirating. And pirating is not some glamorous film with Johnny Depp. It is a very serious phenomena affecting shipping, crew, and cargo. And this is a threat to the global economy as well. Instead of passing through the Suez Canal, today, thousands of ships have to go via the Cape of Good Hope in South Africa. And this is not the only challenge that shipping is facing. We have drought and low water levels in the Panama Canal, also causing delays and increased cost. But still, shipping is doing well, and shipping is key for trade in the world. More than 80% of all traded goods are transported on water. That is around 93,000 merchant ships, more than 1.2 million seafarers, and 6 billion tons of cargo. And this activity is key to supply chains all over the world. So how is shipping doing today? What are the different challenges and how are they coping with them? What about the green transition? This is what we're going to discuss today, and I have the honor to have two great guests with me today. Carl-Johan Hagman, who is President and CEO for the NYK Group Europe in London. NYK is one of the biggest shipping companies in the world. And we have Jan Hoffman, who is Head of Trade and Logistics at UNCTAD in Geneva. You're both very welcome. So let's start with what has made a lot of headlines lately, pirating in the Red Sea, in the Suez Canal. Piracy and attacks against ships and vessels is, of course, nothing new. It's been going on for hundreds of years, and incidents occur all over the world. But the last decades, they have been concentrated to the Gulf of Aden and the Suez Canal, but also some in the Western Indian Ocean and Southeast Asia, and some on the west coast of Africa. In the beginning of the 1990s, we saw a large increase of events outside Somalia due to the civil war and the economic chaos. And piracy is, of course, a huge threat to the crew who are working on these boats, but it also affects cargo shipping, cruising, navigation, fishing vessels operation, and thus creating enormous challenges to international trade and international and national economic stability. So let's start in the Red Sea. The Iran-supported Houthi rebels are attacking vessels. This is very much linked to the war in Gaza, and only this year, 85 crew members have been taken hostage. Revenues have dropped by 64% this year, and the detours around South Africa take between 10 days and up to 3 weeks. So what consequences does this have for the business? Carl-Johan, can you help us to give the bigger picture on this?
Well, thank you very much, Cecilia, and thank you for bringing this very important topic up, because our challenge, I guess, in the industry is that we feel that we operate sort of on the other side of the horizon, and I think one of our biggest challenges is that the industry works well, and therefore we don't create much headlines, despite the fact that, as you say, it's actually quite dramatic out there. So I think from an overall point of view, and maybe we can come back to that later in the seminar, this is what happens in shipping, and we've had these type of challenges and this type of volatility, I believe, for hundreds of years. However, what we're facing right now, I think, is slightly different. So on the particular issue of piracy, I mean, since about 25, 30 years ago, as you mentioned, we've had pirates off of Somalia. We've been able to mitigate that by way of good communication, by way of, in a few cases, armored guards. We've had challenges in the Hormuz Sound for equally long. That has slightly different characteristic because the Republican Guards it's a military unit. What we're seeing in the Red Sea right now is, again, a new sort of facet of this. Now we're being threatened by supersonic ballistic missiles, and there is no chance in the world that civilian shipping can protect itself against this. despite, I think, very good and important efforts from nation states that are trying to support us. So the company I represent, we actually had the Galaxy Leader on charter, the vessel that the Houthi rebels took in November 2023. Since then, we have stopped transiting the Red Sea, as I think more than half of global shipping has. I think the larger Western companies, all of them, have stopped this transit because of that risk. That has created some market dynamics which have increased freight rates, which have increased profitability for the shipping companies. But again, as you said, maybe that's not the most important part. The most important part is I have 24 colleagues that have not been able to leave their vessel for 9 months, and that there are somewhere between 1.2 and 2 million seafarers around the world who are underpinning the prosperity that the rest of the world is enjoying by way of transporting 80 to 90% of global goods. And had this been on shore, nobody would have accepted that you would have been incarcerated by a third party without being able to communicate with your staff for 9 whole months. And this is not the only vessel. Only in the course of July, we've had 10 incidents in the Red Sea. Before then, we've had, or still have, situations in the Hormuz and in other places of the world. So I think the plight and the sacrifice that our seafarers are actually experiencing, I think is really the biggest issue, because other issues can be mitigated economically in one way or another. But as you say, these are human beings who are being exposed to a situation that would, in other circumstances, be completely unacceptable.
This is geopolitics moving right into the navigation room, and of course impossible for individual shipping companies, even the big ones, to handle on their own. How is this viewed by UNCTAD and the United Nations, Jan?
Yeah, no, first, thanks for the invite. Thank you, Carl-Johan. And we are shooting in the same direction. As Carl-Johan said, shipping, ports, customs, trade station has been taken for granted. It all worked. What's more in the news, maybe trade liberalization, tariffs and duties and so on. But actually, there was an article in The Economist who called the container the humble hero, that argued very correctly that the container has had a bigger impact on the globalization of trade, of production, than trade liberalization. So this efficiency of the ports, of the shipping, of the trade station, of port operations, procedures, it has not been in the news. And I was just calculating, I'm actually now 30 years in this UN system monitoring this data. And whatever indicator we take, that be it our shipping connectivity index, the logistics performance index of the World Bank, the container port performance index, I mean, year after year, it had been getting better. And what we have seen over the last 3-4 years now with COVID, with the Ever Given stuck in the Suez Canal, with the Black Sea, Red Sea, Panama, all of a sudden, things were really getting bad, and we could see and measure this negative impact. It used to be said, oh no, the shipping is only a very small part of the price of the final good in IKEA from Sweden or Walmart or Carrefour. But if the freight rates go up 5 times, 7 times, it starts having an impact also on prices. And I think any listener here who's with us has, over the last few years, for the first time possibly in his life, seen, I was ordering this or that piece of furniture or some other equipment, and there were supply chain crises, interruptions that led to delays, to prices, to disruptions, which make it, that's also why you have invited us to discuss what is really underlying these trends. And right now, yes, what is in the news is this human catastrophe for the seafarer. I mean, shooting at an international ship these days is shooting at the world. It's ridiculous to say that I am shooting as this or that nationality. The flag of the ship may be Liberia, the seafarers are Indian or Filipinos, the manager may be in Switzerland, it may be built in China or Korea, and in short, in the UK. I mean, it's really, really the most beautifully globalized production, and it's ridiculous to shoot at one ship and thinking I'm now targeting this or that particular country. And in the end, yes, it's the world economy does notice. It's no longer a marginal little 0 point something price in the final good, but we do see an impact.
Yes, and of course you both spoke about the humanitarian suffering, people who are being kept hostage, and the danger and the threat and the menace they feel all the time, and their families and their employers. But you have the delays and you have the increased costs, and that influences, of course, both companies, but also individual citizens waiting for their bicycles from China or what have you, who are doing all this. So what can the world do? I know that the International Maritime Organization, for instance, they have been trying to map the phenomena, and they publish statistics, and so do you at UNCTAD. There are codes of conduct, there are best practices. I mean, obviously, the shipping industry and UNCTAD cannot solve the conflict in Gaza, but what can the world do to increase the safety of these transports? Because it is so important for the global economy.
Yeah, I mean, for the specific issue of safety and security, I would say in this case, it is really more the realm of the IMO, International Maritime Organization, and it's very tricky as United Nations to take sides one way or another. However, it is now already for several years that we have worked on a wider range of areas where we can make the whole system more resilient. And basically that means I am less dependent on a small number of deep supply chains. Sometimes you can have up to 9 levels deep, like the input into an input, into a part, into a piece that goes there. And to make this a bit wider, to depend on a larger number of regions, on a larger number of providers, also on a larger number of shipping company as providers, of modes of transport, makes the whole system more resilient. That is one thing. The other one is, we do need spare capacity, which of course is costly. And what we have seen right now, and I think we come to this with the lack of available capacity. If ships all of a sudden have to go around South Africa instead of the Suez Canal, or have to go even longer distance to avoid the Panama Canal, which has limited capacity, then, and if these ships do not yet exist, then we regret not having built more ships earlier. Yeah, and that's much easier said than done. Yeah, I encourage ship owners to order ships early. If you order a ship today, you get it in 3 or 4 years. It's easier said than done, but this is, I think, the second part. One is the whole systems, make digitalization, make efficient forecast data, resilient systems. And then also, some of you may remember long ago when we flew a plane, we had empty seats next to us. That no longer happens because the airlines also have the yield management, and if anything, it's overbooked. So if there's a shortage in supply or surge in demand, there's no spare capacity and prices go up. And I think this is the other aspect that we also see in shipping.
And because Cecilia, if I
your company, please.
Sorry. No, because
I was just going to ask how NYK and your other competitors, but you are facing the same dilemmas, even if you compete. Are you working together and trying how you try to protect your staff and your cargo, and what could happen, or just avoiding it and taking the detour?
Well, okay, so I think there are 2 aspects of what we're discussing here. One is what we do to secure the safety of our employees and our staff, and of course. When you come to a certain threshold of insecurity, you decide just not to go to that area, whether that be the Red Sea or the Gulf of Guinea or the Malacca Straits previously. I mean, that's the ultimate. I would have thought that it would have been much nicer to get escorts from military units that were controlled by democratic nation states rather than we ourselves putting on board armed guards, because I think if you pay taxes, you should get security. And the third point I'd make, I mean, the richest people in the world are going to have to pay for this. So, I mean, it's the rich that are going to have to pay to ensure that the system has worked in the way that the Dutch did in the 17th century and the Brits sort of after that. I would make the point that everybody benefits on trade and therefore everybody should be part of paying, actually. So that's one point. The other point, though, just to comment on what John was saying, I actually think the system works quite well. I mean, we've had a number of disruptions over the past couple of years. Before then, we've had a number of disruptions. And in my view, that is sort of the nature of the business. Now, I don't think global supply chains have been completely disrupted. I don't think that people have not had food on the table, but rather that the resilience of these 90,000 vessels sailing around the world have actually managed quite well and have managed sort of with the capacity that there is at hand. Yes, some transportation has become slightly more expensive. On the other hand, I would argue that transportation has been way too cheap for way too long. And one of the reasons why we don't have the overcapacity that Jan is talking about is that nobody has made money in the business for the last 20 years. So, I mean, there's a market economy mechanism that, in my view, actually works quite well. So what is happening right now is that shipyards are chock-a-block full because people are ordering vessels, because it's very simple. When markets are strong, people order vessels. Now, usually the cyclicality in our business is roughly over a 10, 15-year period. And peak cycles usually don't last more than 2 or 3 years, because that's as long as it takes to build vessels. And I don't think we should bemoan it too much, because this is a near perfectly working market with a very strong supply base, primarily out of China, and there's plenty of capital in the world. This is one of the few sectors where you can double your money in 6 to 12 months, and that is very attractive for very many people. On the demand side, I mean, this has been fantastic. I mean, since the fall of the Berlin Wall and China's entry into the WTO, we have grown almost twice the rate of global GDP. Since the last couple of years, we're now only growing on par with GDP, and many people are very worried about that. I am not, and that's why I think a lot of people are ordering vessels. So I think sort of if we think that supply chains really have collapsed, then we have a problem. But I think we should actually celebrate the fact that it's not the case. However, coming back to the first issue, we have 1.2 million seafarers who are paying the price.
Yeah. No, I don't think you're absolutely right. The whole sector has done surprisingly well, and we'll come back to that in a little while. And it is not collapsing at all. And shipping in trade is still so important. And there are cyclicals like in all sectors. Then now we have the pirates, and then we have issues in the other important canal that you mentioned, the Panama Canal, where also a lot of ships go through. I think 14,000 ships every year usually pass there, and has been the case since it opened 1914. But now there is drought problems, and the freshwater supplies for millions of people via the lake Gatun is causing problems for people, of course, but also for the canal as well, which leads to long waiting and less capacity. Now they're opening a new reservoir. It will be ready next year, I think, to increase the water accessibility, but also the pressure on the canal will increase. So will this be enough, or is this also something that you sort of count into the cyclical movements of the shipping? Because this is, of course, caused by environmental disasters.
Yeah. So let me just start by saying I think the Panama Canal Authority are doing a fantastic job to try to get as much through as possibly can. The company I represent, we have a somewhere between a 30 and a 40% capacity drop because of that. And each vessel that goes from the US to Asia, we add on another 22 days by having to go around South America. Now add that to the Red Sea and you have another 12 days there.
That's a month.
And then all of a sudden what you do is you sort of exacerbate a situation. So what I would say that these things, they amplify a underlying cyclicality, and we of course they are not comparable, but as you allude to, yes, they are part of what shipping is. These things happen, and that is the characteristic of the business. Now, in this case, it's no good, and not least because of CO2 emissions. I mean, we have worked extraordinarily hard over the past couple of years to have reduced emissions profile in absolute terms, and then these things happen. I mean, not only do we travel further, but we have to travel quicker, so we speed up the vessels, and of course, so we are that is a large concern. But again, I think whether it is sort of piracies, or it is natural disasters, or there are other things that sort of jolt a system that is continually looking for perfection and an equilibrium. And I think with technology, where there are fewer and fewer bottlenecks and there's more and more transparency, the system becomes more and more refined. And because of that, there is less and less redundancy that Jan is talking about. And of course, with less redundancy, the amplitude of the cyclicality increases. And I think that's really what we've seen here over the past 2 years.
But the revenues from the canal owners in Egypt or Panama, for instance, are severely affected. Of course, they've gone down with, I think, 40% only this year. So how do you see that from a development perspective, Jan?
Yeah, in fact, we did some assessment of who are the countries actually affected by these limitations. And the country worst affected, I would say, is Egypt. It loses the income from the canal, important part. It also loses out on its own connectivity, because if Egypt trades with Asia, it now, it has to feeder through Valencia or Algeciras. So the ships have to go south round. I was recently in Valencia, and there were ships, for example, by your colleagues from COSCO, who would not normally call in that port. They would go through Suez and then call in the Egyptian port. So they lose the canal income, they lose their own trade competitiveness, and the third income they lose is some of the transshipment business, because they were a node from where you could redistribute to Turkey or other. So Egypt is the one most affected. Panama, and I agree, they're really doing a good job managing the water resources as good as they can. Now, on the side of the Panama Canal, the demand has not gone down. On the contrary, demand is there. So the reduction in income for the Panama Canal is not as bad as the reduction of income for the Suez Canal, because Panama could increase prices. So we have to be there also. Just comparing the two canals and the options that carriers have, the shipping lines. If you trade between China and the US East Coast, or between Asia and North America East Coast, for most commodities, you have basically two options. Either you go through Suez or you go through the Panama Canal. And if these both choke points are now limited, then this has really led to this surge in trading costs, especially for bulk commodities, for gas, for dry bulk. For containerized, fortunately, one could argue there is a third option. If I want to go from China to Chicago or the US, I can also go to Los Angeles and use the so-called land bridge. But that, of course, is more expensive, taking the train, and that only works for containerized. That does not work for gas or others. No, but that makes the whole thing. When we look at the impact on container freight rates, the Suez Canal impact is much stronger than the impact of the Panama Canal. Panama, again, has a stronger impact on certain dry bulk and gas trades. And sorry if that gets a bit technical. I was wondering, you remember I prepared a couple of slides. Maybe that would be a nice moment to share these two I'm looking at Cecilia here, if that's the moment to share screen.
Absolutely, because
Yeah,
you both alluded to, yes,
yeah,
there's a lot of
yeah,
pressure on
yeah,
on shipping, and we have both, wars and piracy situations, and we have natural disasters, and we have COVID with lockdowns
right.
and closed harbors, but still shipping and thereby trade did surprisingly well and has
Yes,
only
yeah,
even more recovered. So I think you have very interesting slides. Please explain
right.
them
A
to us,
couple,
Jan,
couple of slides.
and then
So,
Carl-Johan can come in.
right, right. So to visualize these freight rates cost we are talking about, here we have like the spot rate of containers coming out of Shanghai, which for many years here, the data started in 2009, but you could really argue for decades, freight rates were very low for many years. Many shipping lines were losing money. Hanjin went bankrupt and so on and so forth. And then all of a sudden, they went up fivefold. I mean, this is really a big first-time surge in containers. Some other commodities like in oil or dry bulk, we have had similar pictures in other periods. But here it was the first time we had this surge. So what you see there, the first big peak in container rates was during COVID, where two things happened. First, during COVID, we all ordered more things online. Yeah, we couldn't go out to the restaurant, to the hairdresser, whatever, tourism. So we ordered more things. And I could tell you the long list that my wife and I ordered online, and a lot of this came out of China. So the demand curve moves to the right. There's more demand. On the supply side, the shipping companies, the ships, the container ships, spend about 20% longer in port. And this de facto means there's less supply. So whatever the audience has studied, I'm pretty sure all have learned at some point in time demand and supply curves. So the normal demand and supply curve, it's two lines. The demand curve is going downwards, the supply curve is going upwards. And shipping has this fascinating, rather peculiar, rather special demand and supply dynamic. So here's the demand curve, and it's a bit in line with what Carl-Johan also said. The demand curve is very inelastic, very steep, we call it. That means you need a big change in the price of moving goods, of the freight rate, to have a small change in the volume, because I really need my iPhone for Christmas. I really need my spare part, my medical equipment, my fuel, whatever. I mean, I pay whatever it takes because the transport is only a small part of the price in IKEA, Walmart, or Carrefour. Now, the supply curve in shipping has this funny form, which for a long time is very flat, and many companies might be losing money because I just cover my variable costs. But the moment I reach a capacity limit, and this is then what happens, then they go through the roof. Here, the move from A to B is actually too little. This is just a doubling. In reality, we saw a fivefold increase. So if I combine these two pictures, here you can see what really happened when the supply moved to the left, because ships spend 20% more time in port. Yeah, this is what happened here, the supply crunch. The supply curve moved to the left. I didn't draw it here, but the blue line actually went to the right because we order more things online. And what is now, what I find fascinating, the current situation with the Red Sea and the ships going around South Africa, it has the same impact, but a somewhat different underlying cause. It's not that ships spend more time in port due to COVID and lockdown and whatever reasons, but they now spend more time at sea, 9% more time at sea, which has a similar effect of taking out capacity. So I think this is the best explanation you have ever seen on what is happening in the shipping markets. And I stop sharing here. I hope this was a little bit helpful.
I think it was very helpful. And from your point of view, Carl-Johan, you actually work with these ships. How would you translate that to your daily business? The graphs of Jan.
Can I then just before you sort of,
please,
we came onto this topic, you said that shipping had managed COVID in a great way, and I think we have from a global supply chain point of view. But again, please let's not forget our seafarers. We had seafarers who could not get off their vessels for 2 years. We had some of the worst paid people in the world who really ensured that the rest of the world worked, because nation states chose to go very, in my view, parochial, and the price was that an enormous amount of superheroes just didn't leave their vessels, with all the anxiety, not being able to see family, the economic costs for them personally. So with that caveat, then we move.
I think that is very important to say that, because these were human beings who could not go into the ports, and who were separated from their families. There is a question in the chat who asked, I mean, there's 1.5 million seafarers around the world, and someone asked, what is the nationality? Are they all Filipinos? As
the statistics vary,
majority
but
of them.
About 3 million people sort of work in the sector on vessels. We think there are about 1 million on board vessels at each point in time, which really means that we have about 2 million. A very, very large portion are Filipinos and Indians. I think it's just, again, just because you're out of sight does not mean that you should be out of out of mind, and I think they are the ones who ensure that our global trading systems actually do work, and I think it's striking that exactly in the piracy issue we have the same.
Can I just compliment? So we have actually on our UNCTAD website, we have statistics on different on the fleet, on shipbuilding, ship owning, ship scrapping, ship registration, and on seafarers, where we share statistics collected together with the International Chamber of Shipping and BIMCO. So there you can see the exact numbers according to this collection of data. And it is true that Filipinos, India, Indonesia, but also Russia and Ukraine are the 5 top countries. Chinese seafarers are a very large number. Most of them work for shipping within China, while Filipinos and Indonesians work more international. But yes, these are the nationalities most negatively affected. And I do want to briefly highlight that at UNCTAD we were quite proud that during COVID we could actually do something. Not much, but we could do something. With the initiative of the government of Indonesia, the United Nations General Assembly resolution declared seafarers as key workers. And that sounds easy to say, it is just a word, but this did help member countries of the United Nations to facilitate visa transit, seafarers being allowed a little more often than they would otherwise have been allowed to go to an airport to transit, not to require visas and so on. So that did actually alleviate somehow this horrible situation of seafarers, many of them stuck, like feeling imprisoned on a ship, not being able to leave, but also seafarers who had been on a holiday and needed to go back to the ship couldn't go back. So they were forcefully unemployed for many months and years. No? So this one is definitely it is an important part. During COVID, they were the ones mostly suffering. But I agree overall, if COVID had struck us 15 or 20 years earlier, it would have been much worse for global supply chains, because the visibility, thanks to AIS tracking, to digitalization in ports, to also collaboration. I mean, there were things, if here you have a carrier and an analyst, if we had a Global Shippers Alliance or Global Shippers Council with us, they would not always agree with Carl-Johan about the shipping lines, and when the container was dropped in a different port than initially planned, the shipper had to pay to pick it up, and then he was one day late, he still had to pay an extra fee, although it wasn't anyhow. So there are some things that did not work so well. We are working on strengthening more transparency, competition issues, and transparency for the shipper. But overall, definitely yes.
Can I comment on your graph, because I think it is super important, if you don't mind, because the COVID thing, in my view, was a detour, because it's really just an example of piracy. But I think your graph is super interesting, because it really goes down to the heart of sort of the predicament that we're in. I mean, if you've not made money, your graph, I think, started in 2008, I think it was. So I mean, if you haven't made money for 15 years, no capitalist in the world will invest. So you invest because of the uptick, or the prospect of an uptick. So I would argue that a very large portion of shipping in the world is really a timing game. It's short-term capital that goes in and thinks that you can time this smarter than anybody else. Because when you run this over a 20-year period, our friends, the cargo owners, I would be happy to take that dispute, because there are really two schools of thought, that either you choose to go spot and short term, and I can only say that many of the cargo owners, particularly in the West, choose to go very short term because of that graph. And that they then once every 20 years have to pay a 500% increase. I mean, it's a big headache. I understand that. But again, you could have pulled that graph even further back. Now, I represent a company, NYK. We are owned by Japan. Japan is still, I think, the world's third largest economy. We're an island. We import 94% of our energy. So we're completely dependent. And the company I represent, we've been around 150 years. We've been through 20, 30 of these cycles. And we don't sell our vessels on peak, and we don't raise our freight rates, slightly different in the different commodity groups. But as a general statement, if you sign up for long-term commitments, now, to a very high degree, I think it is the cargo owner or the end customer that sort of chooses how you want to build your supply chain. Now, if you rely on the market dynamics and on the spot market, and you believe that over the longer term you get higher quality to a lower price, and then there are other places, and just interestingly enough, islands who cannot survive if they don't have functioning logistics, where you have much longer term commitments, where you work on your supply chain through the cyclicality of boom and bust. And they then think that that is a better way of organizing your world. And I think when we talk about the shipping industry, it's not only different types of commodities that we are transporting, but it's also commercially two very different types of conversations that we have with our customers and our cargo owners, and expecting that you will have low prices for a long time. I mean, I am super happy to provide anybody with that. I mean, as you say, if we order a vessel today, I get it delivered in 3 years. We're going to be operating it, for 20, 25 years. Making that commitment today in today's environment, you can only imagine what investment committees or banks think about that. So for us to have longer term commitments are extraordinarily important, especially now. And I guess that's where the conversation is going to move in the biggest transition that we're facing, and that is the whole decarbonization of the whole sector. How do you decarbonize a sector when all your customers only want to go short term and you want to pay a day rate because you believe in the market? Now, I also believe in markets, but I don't feel sorry for the people who do, because somewhere sort of we have to understand that market dynamics are what they are, and to try to manipulate those in one way or another, I don't think works. To the contrary, if I may just end this, but 73% of the world is water. We are regulated by one single body, IMO, and I think it is absolutely fantastic that we actually have a global trading system. Many of our challenges in the world are global. We're trying to fix them through this thing we call the nation state. It doesn't really always seem to work. Whereas in shipping, we actually have this regime, and I think we should be very proud of it. It's far from perfect, but it's a lot better than many other things in many other places. And therefore, sort of the sanctity of a free market under one single global regulation under the United Nations, again, I think is something that we should celebrate.
But where is all this going now? You said you have one single regulation, and that you do cooperate with all the imperfectness that is there, of course. But shipping being such an important part of global trade, it's also quite an important part of global emissions as well. I think today shipping is responsible for 3% of global greenhouse gas emissions, and according to all the prognosis, it's going to increase the coming decades. And now with the boom of the shipping as well, you can see where this is going. At the same time, shipping has just become included in the European Union emission trading system, phased in until 2027, and the International Maritime Organization, that sort of organizes the whole global shipping system, has agreed to diminish the shipping sector carbon footprint. And there are timetables going to 2050 where they have said that it's going to be carbon neutral, so being zero emission. How is this going to happen? I know that you have been working a lot with IMO on this, Jan, and you, of course, Carl-Johan, with one of the biggest shipping companies in the world, this must be top of your mind, or at least second after the pirates.
No, it is absolutely true. And as Carl-Johan said, a bit what we have seen here with COVID, with the Red Sea, the Black Sea, Panama, it's a short-term precursor of the big challenge for which we need to get ready. And I think we are here, the three of us, shooting in the same direction. Certainly a global multilateral regime also for decarbonizing sector is preferred for everybody, for the shipper, for the client, and also for the carriers. And I'm really happy to see that Carl-Johan's company and the International Chamber of Shipping, they have all now embraced the move towards a coherent global mechanism, including market-based mechanisms or economic measures, whatever name you give it. And in that sense, Cecilia, you referred to European Union, other initiatives. Sometimes the perfect is the enemy of the good.
Of the good, yes.
So having some regions, countries move ahead, for me as United Nations and loving global shipping and the global reckoning, I used to work actually for the IMO, and I'm not happy to see this, but I also have to admit that this adds pressure on the member states and the IMO to please move ahead. And there, I want to come back one more time on the issue that in terms of the resilience of the system, of the impact of somewhat higher freight rates, transport costs on the economy, that this is not big. Different countries and different trades are impacted differently. When we looked at the impact of COVID on prices, the global impact on consumer prices was 1.5 percentage points, which is not nothing. It is something is added to inflation, even at the time when Paul Krugman was still saying, do not worry about inflation. So there was some contribution. However, the small island developing states had up to 8 percentage points additional prices. And this eats into a poor family's household. This is a real decrease in real income. And if we now look at the potential impacts of decarbonizing shipping, again, different countries will be impacted differently. As countries that are far away, that already pay more for the trade, that have less choice, less competition, imbalance, they go full one way, the ship have to come back empty, and so on and so on, they will be more negatively affected, as are some countries that export, above all exporters of high volume, low value raw commodities, iron ore, soybeans, but also reefer cargo. So some cargoes are more negatively impacted. And I have to understand, I have to accept that those countries who will be a little more affected than others want to know what exactly will be impact. And they are careful, they want to analyze. That's why the IMO did ask UNCTAD to do these impact assessments. And we, in a way, what we assessed was no surprise. Now, seeing that the impact assessment resulted in forecast simulations that are, I would say, as expected, would still, and then I come back to the common denominator, it is still better for everybody concerned, for the carriers and for the shipper and for the policymakers, to have one multilateral framework, to have predictable environment, to have a predictable carbon price and regime, which will reduce costs for everybody. And I'm really sorry, Cecilia, and we had said we have to find points where we would disagree to make the discussion more exciting for them. But so far,
we don't
I think
necessarily have to agree, but
most.
we can be a bit forward-looking, because of course there are these goals that the IMO have set up, and obviously it will be easier for some to reach them than others, and there will be lots of hiccups during the journey to 2050. But still, you know, this is a commitment, and why when IMO made it on behalf of all the members, of course, it was very largely broadcasted that this is a responsibility that we take. So there are expectations, of course. So how are you going to deliver this, Carl-Johan?
No, because it is really a conundrum. And let me just sort of say that how important we think this IMO mechanism is. Our vessels trade in 60 different jurisdictions during the course of their lifetime. Now, if we had let 60 different countries decide what vessels would look like, then we would have real serious problems with global trade, I can tell you. I mean, then we would have pure collapse. But just to comment, so 3% is a big or a small number, but I would argue that if 80 to 90% of global trade emits 3%, can we at least just agree upon that transportation is an important area, but it's not more than 3%. However, if you convert the 3% into real numbers, I mean, it's 1 billion tons of CO2, and 1 billion tons is a very, very high number.
And it's going to increase the coming years, according to all calculations, right?
Yeah. I mean, global trade increases, we speed up the vessels, we do all these other things. And I must say that without a common IMO initiative, evidently we're not bending the curve, and therefore we have to rely on the free market. And here we are engaging we try to engage with all cargo owners. It's very, very difficult, and it's very difficult between the different sectors, I can say. But in our company, at least, we've committed to reducing our CO2 footprint based on 2021 year's numbers with 45% up until 2030, and we can do that with sails and bubbles under the hull and cleaning hulls. And I mean, they're known technologies, and I think the whole industry is moving in this direction, which I think is great news. The other one is the slow steaming. The fuel consumption is logarithmic to the speed that you run the vessels. So again, a market which is not too tight and where you don't make too much money is probably very good for the environment. But as soon as people make money, there is this financial sort of driver that when we look at the real world, it's really difficult. But the point is, after 2030, where do we go from there? And at least in our analysis, that means that we need new fuels. We have to, if we want to go beyond the 45% reduction, new things have to come on stream. That's relatively urgent, again, because if we order a vessel today, we get delivery 2028, 29. That was only a year away from 2030. That's one issue. I think that's the smaller one. The bigger one are the full supply chains. And that means that we have to start committing to long-term offtake agreements in order to get the energy sector or the power sector to start producing this stuff. And that is only happening to a very, very limited degree. And so I think really the cargo owners and we have to get our act together. We've been talking about this for decades, and it's probably not moving quick enough, and therefore we need this IMO initiative, where, as you say, the pathway they have now pointed to in a neat way. However, it's at meetings this year and next year that the mechanisms to make that happen will be decided, and that is geopolitics. But as Jan says, it's interesting that the whole industry is now asking to be taxed uniformly, because we understand that we have to contribute, and the alternative is the EU ETS and other regional mechanisms that are in the long term really challenging for the global trading system. And therefore, rather getting one mechanism, let's just get on with it. And my argument would be that if the world has been able to absorb 200, 300, 400% rate increases according to Jan's diagrams, I think that we could probably decarbonize shipping with a 50% rate increase. So the volatility of global shipping, I think, sort of dovetails into an extraordinary resilience in the global economy, especially when economies are doing well, and the ability to absorb the cost for the transition, I would argue, is there, but the mechanisms are not.
Yeah, no, and I would fully agree that the volatility for overall economic development, for investment, for many things in development, volatility is worse than a predictable certain increase. And this is why I'm really happy to see that also the industry and many countries that used to be reluctant and concerned, they have understood it is actually in their interest. And the beauty, if I may say, of, you mentioned the word tax. It's not, of course, not allowed to call it a tax. We call it a levy or a contribution or fee-based or different systems. But there must be an economic incentive, there must be a price. And at this moment, everybody is waiting for everybody else. The ports, you mentioned the shippers, the cargo owners, the energy the generation of energy, but you still need the ports to invest in bunkering facilities. You need the distribution. Everybody's waiting for everybody else. They're the shippers and
So
the carriers.
a global
Yes.
carbon tax, as we would say in Europe, or a fee, as the Americans would say, or at least a global mechanism.
But Cecilia, if we don't call it a tax, can we call it a redistribution within the industry? Because if it's a tax, and that's the problem with the EU ETS, so you take money out of the industry. Well, the proposals we have on the table are at similar amounts, but that you use this money to actually decarbonize the industry during a transition period. So I mean, it's really a redistribution within the industry itself. Sorry.
Right. And it makes the alternative fuels competitive once you have the other ones, the bad fuels, at a higher price. And I have to put my United Nations hat here. Those countries who are poorer, smaller, and more negatively affected by any cost increase, and who did not contribute to climate change in the first place, some of the funds has to be channeled to supporting them to cope with the higher costs in future, and whatever name you give it, compensate, invest. Whether the money remains within the sector, outside the sector, this is really not the point within the global big picture of development funding. I'm perfectly happy if it stays within the sector. I think there's lots of good reasons. The World Bank has done some good work on this, also assessing how the money should and could remain within the sector. That's perfectly fine. But it's these three mechanisms. First, it makes the alternative fuels competitive. Second, it leaves the decision of how to go to that, how to reduce, what to do for different commodities, different trade routes, the motivating different. So the private sector can choose. So that's for me a second point, coming actually myself from a little shipping company, private sector, long ago. And the third point for us now with development, some of the funds has to help the poorest and most negatively affected.
So if this global distributional fee on carbon would be decided, who would sort of administrate that? Because there's not only the shipping industry letting out emissions. I mean, this is a discussion that is ongoing all over the world with different initiatives. I think there are 40 different versions of carbon fees around the world. The CBAM in the EU, the UK has something similar, and the list is long. So if you were to wish, is this something that you would internally administrate so that you could sort of finance those who have most difficulties going through the transition? Would the IMO do this, or would it be
Yes, it's the IMO, Cecilia. It is. I mean, we are just so blessed. We have something called the International Maritime Organization. It's built around the principles that were established by Hugo de Groot in 1609, that this is common territory for all mankind. And actually, it's a United Nations organization that works very well, has strong support from the industry. And as Jan says, there are a number of technical issues here. And I think IMO representing sort of the nation states in the world, while still having the technical expertise to understand the business and to understand the flows. I think they are extraordinarily well suited to manage this for 73% of the world's surface, and they're doing it in so many other areas. So botching this on to their remit already, I think would be an easy
this
thing.
Would be quite urgent to decide upon, because as you say, there are lots of people are buying new vessels and they are ordering, and it takes a couple of years. So the vessels need to be constructed for this alternative, more environmentally friendly fuel, which would be methanol, for instance?
And on the most macro levels, and so Jan made the point also that this uncertainty, even if we as an industry can cope with COVID and we can cope with Panama canals and what have you, but of course, disturbances and uncertainties cost money, and the fact that we don't have a level playing field and we don't have a pathway where we know what the rules will be. of course that creates uncertainty. And from the most abstract point of view, that is costly for global trade. Not least also for the fact that we are emitting 1 billion tons of CO2 every year. So if for no other reason, just for that reason, it's sort of urgent. But giving us the rules that we can abide by, and then letting the market economy do the rest, I think is a great formula.
Yeah, and I think there are already precedents. The IMO did create the oil pollution compensation funds, which is also a mechanism of collecting funds in case of oil spills to pay others. And here it's not that all this difference in price will be distributed in huge amounts, but some of this will then be a fee bait or discount for those who use the good fuels. And part of it,
what are these? What are the good fuels? Is it methanol, or is it something that hasn't been invented yet?
No, it's methanol. I think well, if we can start with sort of, we think that sort of LNG, compressed gas, has a 30% less footprint than MGO, which is diesel, you can say. We're trying then to blend this with biofuels. Now there's a political conversation, and there's an issue regarding supply. We believe that methanol is one very interesting way to go. However, there's still a carbon atom in methanol. And therefore there is some contention around that. But again, if you can see what we call blue methanol, which is with a carbon capture mechanism to it, I mean, that is one way, one pathway. Our company, we're working a lot with ammonia, simply because the Japanese utility industry, because we are finding it difficult to transport hydrogen. Sort of hydrogen is fine to transport in pipelines, but as soon as you put it on a ship, you need to freeze it to such low degrees that it practically is very, very difficult to do this chemically. And therefore you have to convert it into something else, but these conversions are quite expensive. So I think there are a number of avenues, and I think at this juncture, let's not decide one avenue. Let's have the whole palette, because right now we just need reductions.
Exactly. I mean, right now, and I'm definitely not the technical specialist, I'm economist, but the beauty of an economic measure is that there's no regulator that decides beforehand it should be this or that fuel or solution. But we don't know how technology will develop and what will be provided. So that's why I'm such a fan of the economic measure. And if you look at different forecasts, there are different like British Petroleum or DNV and Shell, different have their forecasts, and they diverge tremendously in their forecasts. Global energy use and use for shipping. So my opinion is as good as almost anybody's. But then for me, this is one more reason to go for the economic mechanism. And if I may connect this very good question, which is the fuel, to my main concern, which are the smallest and weakest economies. Already today, if I'm a small island in Kiribati or in Tuvalu or Solomon Islands, and already today I'm far away, I'm served by small ships who come full and go back empty, or maybe rarely the other way around. When they arrive on my island, if I'm lucky, I can provide diesel. If in future I have to provide green methanol and ammonia and hydrogen and what have you, then it will be even more difficult for me to remain in the global shipping network. We have this UNCTAD liner shipping connectivity index with MD's Transmodal, and it does show already now, the last 20 years that we measure this, the connectivity of small island is stuck. Many of them are really stuck, while global averages in the best connected countries are ever better connected. And we have serious concerns that if now the fuel is even more difficult, and the alternative fuels, it's not just they're more expensive, but they are less energy dense. So you need to transport 2, 3, 4 times more volume to generate the same energies. You need bigger tanks.
Which is good for the transportation industry.
Yes, it's good.
I'm trying to be funny, but Jan, EU ETS, when it's built out, will bring in $10 billion or 10 billion euro. So the shipping industry is paying the EU 10 billion euro a year. Now, isn't that money that could be used to build these supply chains that you are talking about, that we need in the far off islands to ensure that global trading actually works? So again, keeping the money in the sector should, I mean, these are enormous amounts of money that should be able to build that infrastructure, because of course the poorest can't pay. I mean, we all understand that.
This is really a fascinating discussion. There has been some questions in the chat as well. Some of them have been answered by your contributions here, and there are one or two more technical, but maybe I can email them to you and you can answer the listener directly for that. Jon Hoffman and Carl-Johan Hagman, you've been extremely generous with your time. This is a huge area. There's so many different angles to discuss. I've learned a lot. So thank you so much for sharing your vast experience and knowledge with us. Thank you to all of you who have been listening, and have a nice afternoon.
Thank you.
Thank you very much.